This is episode 7 of the Bitcoin price report for November 10th, where we discuss the macro, the micro, fundamentals, and technical analysis with a focus on the Bitcoin price. Today, Bitcoin was at 18,068 in the afternoon, down 11.9% from last Tuesday. We made a significant break below the very firm support level of 18,550 and reached a new low of 15,723, but rallied with stocks and other assets from today's inflation report. The last few days, we had incredible disruption in the crypto markets. The token of FTX, the second largest Bitcoin and cryptocurrency trading exchange that is led by Sam Bankman-Fried, collapsed from $20 to currently around $3.40 due to fears of insolvency. CZ, CEO of Binance, the largest crypto exchange, tweeted on November 6th that Binance would sell nearly 23 million FTT tokens, which is 17% of the total circulating supply of FTX, after reports from CoinDesk and other media questioned the solvency of FTX. On November 8th, CZ tweeted he signed a non-binding letter of intent to purchase FTX and support with liquidity, but the next day Binance walked away after its team reviewed the balance sheet of FTX and its trading firm counterpart Alameda Research. It seems FTX has lost nearly $10 billion in customer funds and is highly likely headed towards bankruptcy and more forced liquidations of its crypto assets. FTX has one of the most popular platforms for institutional funds and traders such as Multicoin Capital, Galaxy Digital, and Genesis Trading. This will likely have an enormous impact on the crypto market, especially in the midst of a slowing economy and a likely recession. The next 2-3 months may be difficult for the crypto markets as we see the collateral damage from FTX unfold. With a combination of a bear market downturn and FTX contagion, we would probably see Bitcoin heading towards the 10,000 to 12,000 range. However, the favorable macro environment seems to have provided significant support to Bitcoin prices and may provide more support in the coming weeks and months. We'll discuss macro later in the video. Overall, Bitcoin's weekly momentum is neutral, and 18,550 becomes a significant resistance level we should keep an eye on. The CBBI.info index is at 5, still in the undervalued range, but remember this index may hit 0 in a recession. We added some BTC positions based on our existing limit orders from our DCA plus limit order strategy portfolio. I purchased 0.17899 BTC after buying 1,000 at various price levels, 70,800, 16,800, and 15,800. You can view our DCA and limit order strategy in our previous video here. Our portfolio was up 0.65% from inception early this afternoon. Let's move on to the macro. The big news was inflation. Both CPI and core CPI, which excludes food and energy, came in less than expectations, so the S&P 500 rallied over 5.5% today, one of the largest in history. As people gain confidence that inflation has peaked, that should give momentum to many asset classes. It should lower inflation expectations, increase expectations that the Fed now has an excuse to slow down interest rate hikes and conduct a more supportive policy for the economy. So we may have a continued rally in the coming weeks. On to some technical analysis. The S&P 500 closed at 39.56. The weekly MACD is pointing up. The Dow is at 33,715 and has resistance at 34,300 as well as 35,500, but is one of the closest asset classes to reaching all-time highs again. The Nasdaq QQQ, on the other hand, is far below all-time highs. It is above support levels of 11,605 with resistance at 12,118, and after that 13,745 if the momentum is strong enough. The weekly MACD is pointing up. The 10-year yield fell to 3.811% after a peak of 4.34% and may be heading down towards 3.5%. The weekly MACD is down. Gold seems to have comfortably broken through the resistance of 1680. The weekly MACD is up and the next resistance is 1809. Oil remains flat at 86 and MACD is also flat. The dollar is down significantly to 107.9 and the weekly MACD is turning down. The pound has broken resistance of $1.14 and is currently at $1.17. The euro is strong but has resistance at $1.036. The yen is down around 141.4 yen to the dollar and should give the BOJ a breather from having to intervene. The big question for Bitcoin is, will the macro asset rally outweigh the contagion around FTX? Is macro going to be the bigger influence on prices if we have a rally? or will the FTX Contagion keep Bitcoin prices down? It'll be a tug of war between the macro rally and the FTX Contagion, but I'm leaning towards macro being more important overall. Feel free to comment down below with your thoughts, I'd like to know. I do feel this is a bear market rally and eventually it will be headed down again. But will this rally last a month? Maybe 3 months, maybe more? If so, we can see Bitcoin head back above the resistance of 18,500 and back into the 20,000 range and even much higher. However, if the recession eventually arrives, I expect stock markets, gold, Bitcoin, all will go down much further than where we're at right now, and we could eventually see Bitcoin head towards 10,000 to 12,000 or even lower in the next year, and that'll probably be a great time to buy. That's all for this week. Please like and subscribe and see you next week.